Hello guys, just doing a live stream, super live, without saying nothing to anybody. I'm just gonna share the link into the group and let's go chart something. Be live right now. Let's see. Just bored. I'm gonna share the link to everyone. Let's see, if we can figure out something all together. I'm gonna share in all the groups. Let's see, BTC, what is doing? Head and shoulder so far is not doing bad. I have like a million BTC chart to be trying to see a few things. We know BTC is pretty crazy. His head and shoulder didn't work. What else I got? Oh, this was an Elliott wave pattern. No, you can hear me. Let me figure it out. Second. Just gotta check my microphone. Can you guys hear me? Just gotta check my microphone. Can you guys hear me? Just gotta check my microphone. Better, thanks. Okay, all right. Let's go check a few things here. Okay, let's start from scratch. What about that? Let's make a nice BTC chart starting from 0. Remove all the indicators. Okay. Let's wait for a few other users to connect. You guys can type question. Let's say if it's better the chat or the YouTube. Probably on the YouTube chat I can see better. Okay. So starting from scratch, let's see what's going on here. And we always have that big of a dilemma between a log chart and a linear chart, but as right now I will be charting in log scale just for a reason, just because the log scale is actually the one that is held in the resistance. So this resistance didn't break yet, and here is where it bounced off, probably because it touched the resistance. If we remove the log scale, we of course see that the trend actually broke resistance in this case. So to be honest, you know, I've done a few studies here and there, and the log scale is the one that's more accurate, as I explained in the channel, because it doesn't actually distort. I don't know how to say that. It doesn't distort the chart. Okay, so let's make this resistance. Okay. And this is actually the main resistance that we have to look for if we want to see some kind of a bullish scenario. Until we don't pass this line, everything is possible. So I see guys like getting excited because BTC is pumping, but you know, we have seen this over and over again, right? You know, you can get excited here and then it fails, get excited here and we fail. Then here we had a super huge bullish run. But you know, those things doesn't mean anything, to be honest. And this is another run that might not mean anything, you know, until we break this main resistance. That's when we can start to like be excited. But you know, as right now, hi Hector. Now as right now we have this 1 year trend. Let me clear up. So from March kind of broke a little bit, just a week. The week broke down a little bit and he had a nice bounce off, but you know, be like super like precise with the volatility of Bitcoin, so I will count that like a nice bounce. Then we have the resistance is too, that they form actually a channel. So let's try to see if by drawing a parallel channel this way we can see lines connecting to this, and I click and I go up. Look how precise the resistance is. Oh, oh, not bad. Oh, not bad. And you know, we have a few things that touch here, right? So that can be our main channel, right? So this is the 1 year trend everyone is talking about. And until we don't break this trend down, we can say we're kind of safe, right? But you know, of course, if we break this trend down, well, that's a problem. Then we will really start to go down, and that's, you know, when we can start to talk about bubble, right? So this is the big picture right now. Oh, let me remove that. Okay. So let's just trace a line instead of a channel. This is our symmetrical triangle. Big symmetrical triangle. As we know, symmetrical triangle can break either up or down, and the trend is getting smaller, tighter, and at some point it will break. It will break up or it will break down, and that's, you know, live or die right there. So I hope it will break up. Let's go check some indicators. Those are the new ones that let's go check our basic one. Let's start from 1 day chart. 1 day chart shows us what? You know, MACD really looks good right here, right? Is pretty low, no all-time low, but it's pretty low turning up, so that's really good. See, looks really bullish. Oh, the blue line might go here and the yellow might go here, so we might see a cross, and that's always a good sign. RSI is pointing up. I don't see any particular divergence at this level. As you can see, the MACD follows the trend pretty much. Now, I posted today a few pictures about divergences, and you know, when MACD and RSI move opposite than the trend, that's when we can start to see some divergence. Regarding moving averages, we are at 1 day chart, so I'll use 250 to have an idea what's going on. And of course, you know, everyone is talking about the cross, moving average cross, that in this case will identify a dead cross. What is a dead cross? Well, a dead cross is where the moving average cross each other, especially 50 and 200. Those are the ones that most of the traders use for long period of time. And as we know, every time moving average cross, they can confirm a change in trend, and you know, the change in trend will be, of course, this correction, and if the cross happen, usually, you know, the trend keeps going down and down. But you know, if this trend keeps going up right here, the moving average might actually go apart from each other, so we might kind of see the pink area, pink line started to go here, and the other moving average kind of going like that. So we still have a chance to don't see that cross. What else in this 1 day chart? Well, you know, our friend Crypta drew, this is not a bull flag anymore because there are so many spikes, and if we try to kind of draw a channel, see what line we connect. Those two, they work pretty good. This one that really goes down, so we have kind of a wedge that becomes apart instead of going together. So it's not any falling wedge, normal one, but it's the one that spread apart. As you know, you can check in the channel, there's a nice chart that Crypta made with all the specification of the kind of pattern. But if we look at this this bull flag, we have this support here, which is the 1 year trend, and this little space left to hope to die or go up. You know, what's up? I see my table, I don't know where they are, or in my jacket. I just put the jacket. Anyways, let's go check closer, because you know, we know this pattern right now. I say that one pattern that I might see, it's like an inverse head and shoulder. Is it? This was one that didn't, I mean, it completed, but it didn't keep its way up there. And then we actually have another one that might be forming and is actually working so far, which is this one right there. So, and then we might bounce off the resistance of the bull flag, and let's see what happened after, right? You know, before we have to arrive here, actually before we have to break this resistance green line, and then we see if we keep going up or not. Of course, we cannot see this by the 1-day chart. It's really hard to say, you know, prediction, but we can see closer and see what we see. But analyzing the 1-day chart and see if we see some other things. Actors say we need to break 965 level, means break the bull flag. 5. Yeah, I mean, it all depends where we break, right? Because, you know, I don't know, Bitcoin might go down and then break here, and this level will be 9,000, or it can go straight up and break 10K, right? It all depends what direction it will go. But as horizontal resistances, we have, and then I'm gonna go close to see better some resistances. But let me check, finish this 1-day chart. I see a few other things. Well, the main level, like I think the most important one that BTC has been trying to break since January, is actually 12K. And 12K is the level that we really need to break. You didn't find it? 1 second, guys. Okay, sorry. This sounds familiar. Where is it? Okay, so Peaches, are you talking with me? I'm Italian, man. You didn't know? Okay, 12K is the level we really need to break. Strong level that BTC tried to break 1, 2, 3, 4, even though this is like 11,500. But remember, if you know we cancel this bull flag and we keep this trend, of course, as you guys can see, this is a massive flat top. Top triangle right here. So that's a good pattern, you know, it's a bullish pattern. And you know, it breaks up, of course, we party there. So that's the main level, to be honest, that we have to break in order to confirm a bullish trend. And then if we break here, you know, the next resistances are very high. Let's trace a Fibonacci retracement of the last bullish trend. The last bullish trend, this one, right? And as you can see from the line, this level here, 11K, been tested so many times, and actually 61% Fibonacci retracement is the tough one to beat. If we break that, probably we will go up to 50%, right? If we break this level, the next level is right here, where 12.7 is. Because there is no resistance at that level, you know, the strong resistance is more here, but you know, we know the Fibonacci can act as resistance itself. And as you can see, this happen again. This is nice to see Fibonacci levels. Fibonacci levels are a level that can be seen as selling point or entries. As you can see, traders look at those lines, and when those lines break, of course, the trend will arrive almost to the other level, which is 78. Then if this level doesn't support, we will end up going down, of course, not to probably to 100% Fibonacci, but here we have the 1 year trend too that acts as a support. Then we bounced off here. There was 6K. We bounced off. There is a red candle right on 78%. Those traders arrived here. They made how much from here? If they bought it, they arrived here. They made 40% in BTC, which is like super high. So few of them they sold because BTC reached the Fibonacci level. Then he went up again, he broke the Fibonacci level. Where do you think the next target is? 61%. Then he went down here, making inverse head and shoulder, because here there was a resistance, sorry, support. And then he went back up to 61, then he broke down, a bounce up to 78. He tried to go down to 100, but there was the strong support. The 1 year trend we all know is the strongest one we have right now, and that's will be the toughest one to break. Actually, I want to show you here why this candle didn't actually pass this level right here, and it's because this moving average here, the smoothed one, smoothing moving average, come on, too many indicators. Moving average. So smoothed moving average 200 is the moving average that held the most. Look at this, like investors, traders, whoever was looking at this, whales, they bought back BTC when it hit smoothed moving average. It's the only one that hold. And if we see the past, the other one didn't, like this one. Moving average 200, didn't really do the great. The 100, but as you can see, the 100 one, and I'm gonna make it more clear, is the one that bounced over and over for the last year, and then it broke here. Then this was bad, of course, and that's when it was 61% Fibonacci, right? 61% Fibonacci, as we all know, is usually the last bounce we want for a healthy correction, right? And it didn't bounce this time at 61% Fibonacci. That's why it dropped almost all the way down to 100%. And I always say this in the lesson that I do with you guys, that usually 50% is a healthy correction. And as you can see here, 50%, look how many times it bounced off. Arrived here, back up to 23, arrived to 50%, and bounce off again. And then after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times it failed. So it's a very strong support, 50%. And of course, as you can see here, this is actually forming a flat bottom triangle, right? The flat bottom triangle, right? And as we know, flat bottom triangle is a bearish sign. So after a while, if this 50% support doesn't hold, I don't know how to say it. Usually this might be do this and break up, it's not 100% that it will break down, but it's nice to see those patterns, because we can decide if to enter a trade in case the triangle breaks up, or we can we can short BTC in case it breaks down the flat bottom. But you know, it's always nice to use those Fibonacci, and as I was showing you guys before, look at this. This is really interesting, right? Look at that. Look at this strong moving average 100. Look how many times it hit and bounced off the moving average. Okay, all those time bounce off. Here didn't even arrive. The here it didn't bounce. It broke down. So let's analyze this. Let's see. Those are all the previous crashes, right? And let's see how much those crashes retraced. So I'm gonna trace Fibonacci level from the lowest point of the spike to the top. And I'm gonna do 61% pretty much, not considering the wicks. So this crash was about 61%, so still kind of healthy, even though it dropped a little bit more, but the candle stopped before, so a nice healthy bounce right here. And it hit moving average 100 and went back up. Now let's go check the other one. Oh, Fibonacci, 78%, the candle almost is 61%, hit the moving average 100, but as we can see here, the first here is kind of like a straight crash. Here it crashed to 61%, then it went back up to 38, and then it crashed back again. Probably there was a kind of, you know, bad news or something, that as always usually happens, and then it went back up. So still, you know, a nice correction, 78%, then went back up. Let's go check this one from here to here, 50%, hit moving average 100, went back up again. Let's go check this one, 61%, hit moving average 100 and went back up, and so on, you know. And this happened over and over again. Actually, we have even another little one, 50%, and go back up again. So as you guys can see, 50% and 60% is always an amazing bounce. Too bad in this case didn't happen at this main spike. Why? Because first of all, MACD was huge. Second of all, because BTC was just $1,000 last January, and you went up like 2,000% up to 20K. So it was a matter of when, and it was gonna drop. So this is the Fibonacci. As I show you, I measure every spike the exact Fibonacci, right? So this is what I did in the previous study to see where BTC could have crashed. And if we were here, let's say, right? And I wanted to know, well, let's check when BTC, how much BTC can crash when it starts to go down. And if we see the MACD at this level is like no high, it's like to the moon. Look at this. Look at MACD. Like MACD, if we check all time, MACD is a massive, like massive high. And you know, I can show you MACD at this level. So when we go back, right, it's already looks high, right? But you know, we had previously high like that in MACD. And if I go, I scroll, actually remove auto, let's auto. You guys see, oh come on, I have a logarithm scale. You guys can see how big was, but then when I move, how small become. It doesn't make any sense. Like it's really look at this. So this one here was a massive high. Like it was insane. 2000 here, MACD. So guys that got in around, sorry if I laugh, but it just you know, it's just funny, but it's the reality. You know, some people really get wrecked. I don't want to laugh, but that's kind of, you know, for people, of course, they don't know the market and they buy the FOMO because, you know, everyone is like, oh my god, BTC is gonna rise to 100k, and people bought it here. They bought it right here. Oh, actually, some people bought it right at 15k, 16k. When was the highest you could have entered? And, you know, of course, then it started to crash. What I did, I put a Fibonacci as I did before from the last spike, right there. Fibonacci from the last spike, and you know, you keep watching BTC, right? And you decide when to sell. You decide when to sell when, of course, when he passed 50% Fibonacci. Probably here he had like a huge flash crash over 61% that went back up in a day, so that was not that scary. But then he went back up, and then he went back down and back up, and there was like a bull trap here. Bull trap is when, you know, there is a bull run and then it fails and it goes down. And then, of course, after arriving at this level, then I identified this flat bottom. Of course, I sold BTC as soon as I could, you know, as soon as at the highest level I could. So probably, I think I sold it. I sold around 15k. I think I suggested in the channel to move all the BTC in Ethereum at that level. And it was a big move because Ethereum at that level was really, really, really low. Let's go check actually. Check December. From Jan. Oh, this USD. Oh, I meant Ethereum BTC. I mean, even December, when I moved my BTC to Ethereum, right here, like Ethereum was 400 bucks, right there, and then it pumped all the way up. But Ethereum BTC is the one that looks interesting because, of course, BTC was up and Ethereum was down. Of course, if I was expecting a crash of BTC, probably Ethereum would have pumped hard. Yeah, right here, look at that. I think I moved my BTC around December, January, right there, probably when BTC was Ethereum was breaking resistance. This is log scale, I think, a linear scale, but let's go. No, around here. Remember, I think around here. You guys can check it in the channel if you don't trust me. But yeah, that's all. I moved all my BTC into Ethereum, and I did 200%. 200%. I did. So it was lower. I bought it lower. Yeah. Around here, I moved my BTC to Ethereum, and there was a big move, and everyone from the channel remember pretty much. Now this huge falling wedge actually failed that I was tracing here. As you can see, it crossed my moving average 100. So Ethereum didn't bounce off of it, but crossed it. So it's going down. It hit 61% retracement of the last spike. and MACD is very low right now. We might start to see some way up here, some reversal. Go check 4-hour chart. See, it's getting flat. It's getting flat right on the 61% retracement. Do you see that? Like it bounced right off 61%. Then it bounced off here, it bounce. So it's actually working very good as a support. We hope to see again that MACD level. Oh yeah, I know, man. Look at here, MACD. There is a cross. Is very low for our chart and is start to go. If you go take a look at even closer, probably is already going. See, there's a cross and Ethereum is going up a little bit, but of course, before to actually I suggest it if you guys want to buy some Ethereum, because you know it's so low at the moment, and you know Ethereum is one of the biggest coin after Bitcoin, as we all know. So it's not bad to buy some. Of course, when will be the best time to buy? When it breaks. Maybe when it breaks here, this resist might be a good buy. Okay, let's go check to our acute BTC. It Phoenix here. Okay, so we figured it out. What? 1-day chart, we said. 1-day chart looks amazing to me. MACD is rocking right here. RSI2 is going up. The moving averages, as I say, they didn't cross yet. The trend is going to meet moving average 100, which is the one that work many times during the year, right? So, and as you can see here, look how funny this is. Look at right here, he hit moving average, right? Hit moving average 100 and he failed. Here is almost did again, but you know here is moving average 100, but it can even be 50%, right? 50% retracement. Now this trend will go here and it will meet moving average again, and that's another resistance. So we have like 1,000,000 of resistance before to call for a bullish trend, guys. So don't get too excited. You know, as soon as you see guys a pump, that doesn't mean you know we hover it. So let's remember, let's trace our main resistance here. Actually, let me leave this. One, trace our main resistance. This one, that's the main one to break. And we will break, right? We will break one or the other. We will break this or we will break the other one. We have no choice there. Now let's go check 4-hour chart. 4-hour chart, what can we see? That's the most like pretty crazy right now. To be honest, at this level, BTC have done everything. It's done everything. So kind of hard to see something. Trying to do like from scratch right now. So we know it's making that falling wedge pattern that broke. But to be honest, let's draw the pattern. It was the fall that broke. Okay. To be honest, I predict this very good that it was gonna hit 1-year trend. Even Bravado say they broke down, didn't believe. So he broke this falling wedge, but you know what? Sometimes then it happens over and over again. You know, we see a pattern that then ends up being another pattern. And in this case, it could, I'm not saying it is, it could be a channel. Could be fantastic. Bull flag though, you know, nothing bad. But a bull flag. Of course, we need some other confirmation before to call for this channel here. You know, if it might bounce off, and as you can see, it's kind of getting close to moving average 1102. This thing might go here, go back down. The Fibonacci maybe, right? Well, and try again, then break, go down. You know, we gotta see while we go in that case. But the main thing here is, of course, these are the inverse head and shoulder right there. So that's the one I'm really looking for. Here, level, bounce off, and go back up. You know, why not? But you know, there are so many patterns we can see while we go. Of course, this head and shoulder doesn't look pretty right here, but if we go 1-day chart, it looks pretty solid. As you can see, we don't see no green or red line between, you know, just a little one. And that's pretty cool right there. Our chart. As we see for our chart, we have the cloud, there can be a resistance, we have a moving average 100, another resistance, we have our horizontal previous resistances. So right now it's fighting those one right here. See, 1 and 2 is right on that level. So when we break this level, probably the next resistances are this one with that. So if we break this level and moving average 100, I forgot, we might go above here. And what that level was, well, that was 9,500, the target that I posted in this channel, right? So that would be my my next target, to be honest. That the one I'm more I think there's more chances to happen. Try to see other things, other indicator. RSI is very high right here, but you know, RSI when it's high is not a big deal, because can mean people are holding the coin, even though RSI sometimes is super high. As you guys can see here, BTC is still pumped all the way up, even though it was already high. So I don't really care about RSI very high when if I think, you know, BTC can pump and RSI is high, I still believe it can pump, because can mean people are holding the coin. When it's very low, of course, when it's oversold, that's very important for an entry if you want. But I always look at MACD first, then I look at RSI. But yeah, for 4 hours, that's what we see. I don't see other things. There's some kind of a bullish divergence that happened already. Raise it. See the trend is going down, and the indicator they go up. and even RSI. I'm gonna trace lower. They act different, right? There is a divergence. In this case, it's a bullish divergence, and you know, if you were at this level, of course, at this level, BTC pump. So this is how you can actually trade bullish divergence. Let's go check. As you can see, you know, the trend, look at the trend here. The trend follows the MACD, right? See? Going up, a little corrections, going up, correction. Look at MACD. Going up, corrections, going up, correction. And it follows the trend. Except in this case, right? Where, you know, it goes up and down, but it doesn't go that down. You know, to be a normal and not a divergence, this MACD should have went way lower, but it didn't go. And the RSI the same. As you guys can see here, the RSI follows the trend pretty good. Then arrived here, and there was a higher low in this case. Here there was a lower low. So that's a divergence I'm talking about. Then you guys can go look at Google image type divergences and you have a better understanding, or I post some picture in the one. So yeah, for our chart, MACD still going up, you know, not bad. RSI is very high. Moving averages, we say the 100 is the one that bothering us a little bit. Go check 50 and 20. I always like to see. So the cross here that you guys see, moving averages 50 and 20 that I personally use are crossing, and they mean trend reversal, right? So the trend is going down. Now they're probably gonna intersect again. If they do, it will mean a trend reversal here. So that's another good bullish sign, to be honest. This level, we say there is this resistance, there is the cloud, it's bothering us a little bit. You know, it's not as strong as when the cloud is pretty flat. When it's flat, we know there is a previous resistance or support. And as you guys can see, where I trace the blue line, look how flat is the cloud. That's where you guys can look at support without actually having this line, right? If I don't have this line, I know that there's support or resistance because it happened in the past, right? And probably remember the cloud is made from the past, like I think 26 period ahead of the now yeah, 4 hours, that's all I can see. Let's go check closer 2 hours and see something more. Here a moving average already crossed. I don't like to see moving average when they're very close. The cloud got broke at this level, this time frame. Grazie Michela. Kaelia. I don't know how to say your name. Are the Fibonacci level values always the same? 178, 61, etc. Yes, they are. Yes, they are. You should not change those, because those are the levels that the traders really look at to entry and exit. I'm just reading a few questions. You guys have any? Anyways, let's see what else we see. 2 hour chart. This was the falling. broke up. I have to see some kind of Elliott or something that, you know, I love Elliott because they're really bullish, but I cannot see really defined one. Now, when I see very defined bearish trend, and you know, this is kind of a bearish Elliott, not really defined. No, not actually an Elliott, can be just waves. Elliott impulse, and those are the waves, right? And maybe there is an ABC correction, then going down again, but I don't really wanna see that. You know, I don't think there is an ABC correction just because I think the support, the 1 year trend is pretty strong. And then we have this falling wedge. As you can see, I trace this Elliott pattern. You know, it's of course in the falling wedge, which you know is pretty common to see that. Actually, it's called ABCDE pattern. And I can put it. It's called Elliott triangle wave, even though it's a falling wedge. But you know, if a falling wedge, if you connect it may end up like a triangle, right? Thank you, Deborah. I hope my accent doesn't bother. And go up. But let's go check for Elliott wave. You can see. Actually, I was just saying, sorry. Every time I see a bearish trend, I can trace my extension based on previous trend, which is this one, and I have my extension, right? And 5, pretty much right there. So remember 9.5, I said where the next support, horizontal support is. So here, there, and there. I have lots of resistance. You can see here a support there, which acts like a resistance. This one, this one, this one. And by tracing my Fibonacci extension, look at my extension where it ends up 161% right on the level. So to be honest, 9.5 for me is the next target, and it's a very strong resistance to break. Okay. Oh. Now I was looking for Elliott wave. This is not super clear one, but it might be one. Sometimes I see Elliott wave that weird. It's not the first time, so I'm not tripping. And again, sorry, I don't want to call Elliott wave. They're just 3 waves. In crypto happen a lot. You know, we know Elliott waves usually are, you know, the 3rd wave is the longest one. But you know, in crypto doesn't happen that much too. We might do this directly and go back down somehow, or we might see this kind of, or going down somewhere, and then you know, lots of ideas. Not a really precise Elliott that I can see. Go check even closer. Actually, let's go check indicators. I forgot. indicators were bullish up to the 4-hour chart. Then arriving at 2-hour chart, they're really bearish level. So the Elliott wave from 2-hour chart might actually be this one there. Then of course, to identify my number 4, I trace another retracement from number 2 to number 3, and I put my 4 at 50%, go back up. Where my number 5 will be, trend base, papa, under 61%, right there. That's how you do it. But you know, the levels are there for a reason, so it might arrive here if you want, right? Or the correction might arrive at 61%, might arrive down to 78. You know, that's we don't know. That's not something we can predict, but we can of course count the previous resistance. So previous resistances is at this level, as you can see from the cloud. Sorry, support. I always, you know, it's not that I misinterpret the resistance support. The problem is that this one was resistance at some point, and now it became support. So this is why I always mess up. But as you guys can see from the cloud, look how flat the cloud is there, and that's a nice strong support. So it might bounce off actually right there, then go back up. Thank you, Hector. You're welcome. Just have nothing to do home. So yeah, that's my view so far. Now it looks pretty messy, but you know, if you've been following this live since the beginning, I know you know how I traced all those things. At the beginning, I traced an inverse head and shoulder, which was not straight as I thought. Was let me remove all those. Here. So this level, I traced this inverse head and shoulder. I thought it was gonna make something like this, right? But it didn't happen. But you know what? It's still kind of making some kind of head and shoulder if we want. With the neckline kind of oblique. From here is making almost this head and shoulder, right? And you know, head and shoulder, they never, I mean, not they never, sorry, they can be however we want. It's not precise. They can be oblique, they can be left shoulder bigger than the other, they can be all kind of ways. They will, you know, it's really good if they're perfect, but they never happen. We can see some example of head and shoulder. You know, as you guys can see here, the neckline is the most important thing. Then, you know, the left shoulder can be higher than the right. It can be oblique. It can be some kind of stuff. You know, it's very hard that we'll find them really precise, right? So don't think about looking like this every time. This is just an example, but can be all kind of a head and shoulder. So this one actually, it's working. So I'm glad I made that head oh yeah, it might work here. It might arrive there, even though because it's forming this inverse head and shoulder. So why not? It passed the 2 hours cloud. Just, you know, in indicators are not that great this level. Let's go check closer. Let's see if we can see 1 hour. That's all I do pretty much with all coins. I go all the time frames. I try to see what I can. Let's make this. Okay. Move this. Yeah, it's kind of weird, like at this level. He might do another pattern like this, you know, and form like 3 waves, but really weird. I cannot see like a very definite pattern. MACD RSI very high. Like at those levels, guys, those are the levels where you should not margin trade. You know, margin trading, you know, you guys all know the Joker is a big margin trading, and he goes short and long on every spike. But you know that he has been doing that for a long time. So when we recommend you guys to do margin trading, I don't recommend you to follow someone that's been doing for a while without looking at the chart. Like margin trading, you should be able to know what you're doing and reading the chart. You should be able to read the charts, because if you don't know, you're gonna get wrecked. Because even though Joker said go short, and maybe he went short 5 seconds ago, you go short late, you get wrecked. Like it's very high risk, guys. So make sure you're looking at the chart when you're doing margin trading. I'm not saying that Joker is wrong, because he does pretty good trades, but you need to first of all learn how to trade, how to do margin, how to do technical analysis, how to read the charts. Margin trading especially, you have to know technical analysis. You cannot go with the fundamentals like, oh yeah, BTC is good, let's pump it. You know, if you want to go 5 times leverage, put lots of money, sure. But if you want to start to go risking, go 25 times leverage, 50, and sometimes even 100, well, you need to get the exact point. Because I'm telling you, if you place a bet right here, you need to go if you want to go long here, and this is 7384, and you go 100 times, you will get liquidated probably there, probably 50 bucks down. So with 50x, probably a little bit lower, and so on. So less leverage you do, more margin you have. But if you do under X, this volatility is so huge sometimes. You make a bet, you think you did good, and then you go hit. So I recommend margin trading when you are in a very good position to do it. And in this case, when you identify a falling wedge, for example, that's the best way to do margin trading. Of course, you should not do margin trading every second of the day. You should do it when it's needed. At this level, you could go long 25 times. Here, go long 25 times up to the wedge. Right here, you hit the wedge, you start to see some red candles, short, and you go down until, you know, there are so many indicators that will tell you when. Of course, it's not gonna go down up to the falling wedge. You can close before, but you know, if you open here, even though you went up here, you still will be good, right? And then you will close probably here, right? And so on. At this level, he went all the way up, then he corrects. So if you put a long here, you close the here, and then you open again when when you have a confirmation of break. Confirmation of break, that means he breaks, goes back down, and then he breaks again. That's when you want to go long, not on the first break. So there are so many things to see when you want to do those kind of margin trading. Don't think it's easy. Don't think it's a way to make up your money that you lost during those 3 months. It's not. Actually, you can lose more if you don't know what to do. And you know, this is why it's not recommended. Plus, you know, it's very addictive. You know, you make some money, 100, 200%, you're like, ooh, and then you keep doing and you lose everything. So I'm recommending margin just in those situations where we are in a situation where everything is crashing, and that's when we want to short, right? But in stable market, I'd never recommend to do margin trading, but there are some people that love doing it, but you know, good for them. Anyways, let's go check even closer. 3 minutes. Yes. Yeah, Marco Calibani said if you try to follow Joker's margin trade in real time, you will get smoked. Yes, as I said, he found his own strategy. He knows how your strategy is. So actually, probably he might lose even lots of times, but make up with the wins. Like if he goes 100x and he puts 1k, 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 he does 5 times and he lose 5 times, then he needs to get 1 time 100x leverage to make up those one and the other money, you know. So it's different ways. You guys need to know the overall picture of his trade, not just, you know, hey, go short, go long. So, you know, just be careful. I have to see some kind of a channel here. Hard. Some channel I want. Because channel I feel safe, you know, until we are inside some channels, I always feel safe. A small one here. Which, as you guys know, known as a bearish flag. So no good for BTC. Like, we could, if we keep going upward in this channel forever, sure, will be good. But you know, the trend change pretty much always. You know, the trend is pretty much made of channels. So I can trace little channels. Channel. Uses a channel. Now I made another channel. So where do you think this channel go? Down, up, down, up, down. So probably at some point we might see this. This why we call that's why we call them bearish flag, because it's a flag that might break down. Breaks down, we're gonna see where we're going. But yeah, it's pretty tough to have a prediction right now. But I'm not gonna express any precise prediction at this moment. Let's go check my other chart. I have like a million of it. This one is my cute inverted head and shoulder that it's working so far. Since BTC is actually doing head and shoulder since the beginning of the time, so we really need to look of head and shoulder, because that's all it does. This one is actually working really great. This is the falling wedge that's broke up. Still a good pattern. So as you guys see, you know, technical analysis works if you see the right things. Don't know here what I was doing. I'm probably in some symmetrical triangle. They can break down or they can break up. Wedge again. The trend. Then I have the other page. Yeah, I think that's it, boys. Like, we are at that level again. Looks good right now. We bounce up the 1 year trend. Our main test, we know which one it is. Is line red. Gonna make pink. That's our main test, boys. So, and girls. So if we break that level, that's when we party. The problem is, and we break that level, move it. Level right here on the log scale, because if you don't do log scale, everything changes. But you know, that's over a point where you guys want to look for, and probably this horizontal level right there, probably the moving average 100, moving average 100. It's the one that got tested here, and let's go check for Fibonacci. I'm good at Fibonacci, you know. It was Italian, it was my cousin, you know. He told me all the secrets. This level, when we break, if we break, you know, we will have the Fibonacci that can act like a resistance and bring the trend back down for a retest and then go back up. I remember moving average 100 here that can stop the run too. So lots of things. The cloud, as you can see, acts as a resistance, but you know, it's just a representation of the previous resistance. There's not an added yeah, so what can happen? Lots of things can happen. The market cap, this point, how much it is? Oh, nice green day. Oh, wow. 347. Wow, yeah. Nice pump. Not much. 275. Oh shit, that was intense. Huh? The market cap 350 billion. Back to December. So of course market cap really looks like BTC at this point, including BTC. Yeah, the altcoins are dropping bad. Let's go check the two charts, and no, not really different charts. But what I was gonna say, sorry, I got like frozen a little bit. So what can happen with our altcoins and Bitcoin? Well, if Bitcoins arrive this level, it starts to break. I really think when money comes into the market, new cash comes into the market, all crypto should go up. So altcoins and Bitcoins should go up together as they're doing right now. Of course, when we see Bitcoin that goes sideways, that's the best way for us to see altcoins to pump like crazy, as we have seen those days when BTC went sideways right here, right here. What happened? Well, at this level, BTC really sorry, not BTC, all the altcoins really pumped like crazy. We've seen 20, 30, 40, 50% up. It's happening again, probably. Another like sideways, and altcoins should go up again. Thing is, so they should go up. When BTC pumps, altcoins should drop, but not that much. Just I think still green, but you know, we'll see 5%, 3%, and so on. Then when BTC goes sideways again, altcoin should pump, and but slowly going up at the same time. When BTC though will break this resistance level, and I'm not sure if here or when it breaks 12K, which is like the confirmation that we want for a bullish trend. Because you know, even though we break the resistance, we can just see a bull run. It can be a bull trap, just a fake break actually from here. Fake break, bounce off Fibonacci, and boom, go back down. So traders are not gonna move their altcoins into BTC at this level, right? I'm just, you know, wondering right now. I'm not sure what's gonna happen. I'm just trying to figure that out. But you know, me as a trader, I really, and this happens every time, altcoin traders, investors move their altcoin in BTC to get the BTC pump when BTC really goes, when there is a real confirmation of a bull run. At this level though, we still are in the correction zone. So when we break this, if we break, because you know we might go down, if we bounce off here, will be 1, 2, 3, 4 times that we bounce off that stuff. We might really go down to 3K. That everyone is talking about, and 3K. Right, 5K is right here. 3K will be the level of the next super right there. But let's not think about that because we, in order to go to 3K, we need to bounce off here. We need to break Fibonacci line. We need to break 1 year trend. We need to break smoothing moving average 200 and so on. So let's not think about that. If we break this level, traders might want to wait to heavily buy BTC because they're gonna look for a test. For some kind of reversal, for a bull trap, and so on. So if BTC breaks here, I still see altcoins going up slowly with BTC while the new cash come in. Then when BTC breaks this level, which is the main resistance, and actually 50% too is a strong one. As you can see, the Ikimoku cloud too is acting as a resistance. Well, this level right here is a strong one. So I will say between 12.5 and 11.5. We pass that, we party. Not with altcoins, we party with BTC. So BTC might actually pump hard, and that's there. It's when you want to sell your altcoins, to be honest, because and you're not gonna, you don't want to hold your altcoins anymore. Why? Well, in this case, when BTC was going down and altcoins were dropping too, because you know US dollars were going outside the crypto, we wanted to hold our altcoins just because we didn't know where the bottom was, right? We didn't know if it was gonna bounce a 50 and actually bounce here, and I sold it there, and I bought my house back, and so on, and back and forth. Then I arrived at some point, I was tired of it. I said, you know what, I'm gonna hold. And then when I got wrecked. My profit went down a lot. Thank God I have still some USDT, because, you know, as I recommend every time, try to keep your 50% of your investments in USDT, because you can buy the dip every single time. And the market, as you can see here, it crashes probably every single month. So at those crashes, that's when you want to buy the dip of the altcoins, especially the big one, Ethereum, Omisego, Neo, and you actually can put all your 50% USDT value in one single coin. Then that coin will recover probably 20%, 30%, of course with a stop loss, and then you move back to USDT one. But what I was saying, at this level, even though your altcoins are in loss, I recommend to sell the altcoins, because you're not doing as you would be doing here. You sell your altcoin to hope to buy them lower. But I want to explain this a little bit better. So if you sell here your altcoins, you want to hope for BTC to go low and your altcoins to go low to buy them cheaper, right? But what if that doesn't happen, right? We didn't know the crash was gonna be this huge, but it was this huge. So in this case, now we're stuck. But we didn't know the dump was gonna be that bad. So that's why we're holding, and we didn't have other choices. I mean, the other choice was to go in USDT, but what if the crash was not gonna be that deep, and then we missed the opportunity, right? But in this case, when we sell the altcoins, we're not selling the altcoins to buy them cheaper. But the main reason we're selling the altcoins is because we wanna get the BTC pump. So we're selling our altcoins to make profit with BTC, and this is what happens every time. When BTC pumps, we see a drastically drop in altcoins for two reasons. One, because the altcoins are priced in BTC, so of course for the economy, altcoins are gonna drop. But even though, because everyone is selling their altcoins, because it's known that altcoins drop when BTC pump. So if you guys know this, what you gotta do, sell the altcoins too, right? So at that level, you will be selling your altcoins. Actually, what I like to do, I will put a stop loss around this level. I will put stop loss to all my altcoins for two reasons. Because BTC can bounce off here and drop strong. If it drops, my altcoins will bleed. And second of all, if BTC breaks up here, altcoins will bleed too, because the traders will move their money from altcoins to Bitcoin. So no matter what you do, altcoins will bleed probably. So that's why I'm gonna put stop loss on all my altcoins. And you know, if BTC drops, you know what? They go all in USDT, and I'm good. But not, I'm gonna go with the BTC pump, right? And sorry, my stop loss, I will put stop loss in BTC. So my altcoins will drop in BTC, will get sell in BTC, and then you know, if BTC drops at that line, of course I will move my BTC right away in USDT. But if BTC pumps, well, I'm good to hold my BTC and go with the pump, and so on. And then, you know, you gotta keep watching the market. You know, nobody ever said that this crypto thing easiest thing ever. You know, everyone thought that you put the money in and get rich. That's not it's like exactly like that. But you know, some good times happens. We have a altcoins season, and altcoin season is when, you know, BTC chills out for a bit and let all altcoins pop like crazy. And this happens, probably will happen, you know, I don't know the future, but if the BTC breaks and then, you know, at some point it decides to chill for a bit and then go slowly up like that, and market cap is kind of like chill, nobody cash out, nobody cash in, you know, we will see some altcoins party, but you know, until BTC is crazy, we won't see too much. But you know, this is a little bit of a review. I hope you guys, you know, learn a few things. I don't know if you have any specific question. If so, feel free to ask while I'm live. Watch out for the bull trap, because, you know, as it did in 2014, BTC went all the way up to 23% Fibonacci to trick everyone, and then boom. So to be honest, I'm gonna be very careful when we reach level here. And you know, if we're pumping and I bought my altcoins back, I don't like to play with stop loss. I'm more like I ride my coins. That's why I keep 50% in USD, because, you know, I have my 50% there. I'm kind of safe, and then I do my trades with my strategy. I don't put stop losses. I just go with the flow. Don't follow my strategy, but you know, I have different ways. You know, everyone has different strategies. I know what I'm doing. I know what coins I'm following. I follow different things. That's why I don't put stop losses. But you know, it's always good to put those. And depends how much time you waste on crypto, right? And that's it, boys. The year is like 11:35 p.m. Canadian time, and I'm going to sleep because I work tomorrow. All right. So I hope you guys appreciated the live. Learn a few things. Don't get wrecked. Safe. Do your own research. Trade how much you're willing to lose. Keep 50% in USDT. What else? Don't margin trade 100x. One else? Wanna say anything? Okay. Well. Okay. Thank you so much. Bye bye. Ciao. See you. Vediamo.